If you've ever stared at a chart drowning in moving averages and felt the noise win, Supertrend is built for you. It's a single line that flips above or below price, telling you, in one glance, whether the trend is up or down. Today, we'll unpack the math, the signals, the weaknesses, and how advanced traders layer it with other tools for real edge. Supertrend wraps an envelope around price using the average true range, then locks one side of that envelope as a trailing stop. When price closes above the line sits below price and you're in an uptrend. When price closes below it, the line jumps above and you flip to a downtrend. It only flips on a confirmed close, which is why it feels less twitchy than a moving average crossover. Here's the formula. Take the median of the high and low, call it HL2. Compute ATR over your chosen period, usually 10. The upper basic band is HL2 plus a multiplier times ATR. The lower basic band is HL2 minus that same multiplier times ATR. The default multiplier is 3. Then apply a ratchet rule. The final upper band can only move down, never up, while the trend is down. And the final lower band can only move up, never down, while the trend is up. Visually, it's simple. Green line under price means bulls are in control, and that line is your dynamic support. Red line above price means bears are in control, and that line is dynamic resistance. The flip itself, where the line jumps to the opposite side of price, is the signal. Everything else is just holding the trend. The primary entry is the flip. On the bar that closes above the previous red line, the indicator turns green and a long signal prints. Aggressive traders enter at that close. More patient traders wait for the next bar to open or for a pullback to retest the new green line as support. That retest entry gives you a tighter stop and a better reward to risk ratio. The beauty of Supertrend is built-in trade management. Your stop is the line itself, trailing behind price. As long as price closes on the right side of the line, you stay in. A close on the wrong side flips the indicator and exits you, often handing the position to the opposite side. Many traders scale out at fixed multiples of ATR and let a final runner ride the line. The two knobs matter. Lower the multiplier toward 2 and the line hugs price, giving earlier signals but more whipsaws. Raise it toward 4 and you get fewer, higher quality flips, but you give back more open profit. A shorter ATR period reacts faster, a longer one smooths. For intraday equities and futures, 10 and 3 is a sensible starting point. For crypto, many traders prefer 10 and 2. Supertrend is a trend follower, so in a sideways range it gets shredded. You'll see flip, 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 each one a small losing trade. This is the single biggest pitfall. The indicator has no idea whether a market is trending, it just reacts to closes versus an ATR envelope. You must add a trend regime filter or simply stand aside in obvious ranges. The cleanest fix is pairing Supertrend with ADX, the average directional index. Only take Supertrend flips when ADX is above 20 or 25, confirming a real trend has directional strength. When ADX is below 20, the market is meandering, and you ignore flips entirely. This single filter dramatically reduces whipsaw losses. Stack 2 timeframes. Use Supertrend on the higher timeframe, say the 4-hour or daily, to define the dominant trend. Then take only lower timeframe Supertrend flips that agree with the higher one. Long signals on the 1-hour are only valid when the daily line is green beneath price. This alignment is where Supertrend goes from a noisy toy to a serious filter. For entry quality, layer in a momentum oscillator. RSI above 50 confirms longs, below 50 confirms shorts, or use MACD histogram expansion in the direction of the flip. The Supertrend tells you what the trend is, the oscillator tells you whether momentum agrees. When both speak the same language, the signal is worth taking. Here's Apple on the daily over the past year. Notice how the green Supertrend line tracks underneath each sustained advance, acting as a clean trailing stop. Watch the flips. The strong ones occur after consolidations break with conviction. The weak ones cluster in tight sideways stretches, exactly where ADX would have been low and warned you to stand down. 3 traps to avoid. First, never act mid-bar. Wait for the close that confirms the flip, or you'll chase ghosts. Second, don't optimize the multiplier on a single instrument over a tiny sample. You'll curve fit and the edge will vanish. Third, Supertrend lags by design. It will never catch the exact top or bottom, and trying to anticipate flips defeats the entire purpose of the tool. Recap: Supertrend is an ATR-based trailing line that flips on close, giving clean trend direction and a built-in stop. Its weakness is chop, fixed by an ADX filter and higher timeframe alignment. Tomorrow, pull up your favorite liquid market, set Supertrend to 10 and 3, add AGS, and paper trade only the flips where ADX exceeds 20 and the higher timeframe agrees. Track the results for a month before risking real capital. This is education, not financial advice. Trade your own plan. If this helped, do me a favor. Hit the like button, subscribe, and tap the bell so you don't miss the next one. See you in the next video.